So I have to say, I love it that I have an insider track. So a client brought to my attention, there was an article actually on the USA Jobs posting board that the IRS Office of Chief Counsel is announcing plans to hire up to 200 experienced attorneys to intentionally go after some of these, the top tax scam items. And, two of the big ones that they're going after are syndicated conservation easements, syndicated being the key word there, syndicated conservation easements, and also abusive micro-captive insurance agreements or arrangements. Now, there's two keywords there I want you to listen to. The first one is syndicated conservation easements. We'll talk about that here in a second. The second one is abusive micro-captive, so abusive micro-captive insurance arrangements. So let's talk about these two and the good and the bad. Okay, the good, the bad, and the ugly. The ugly is these 200 attorneys are going to be coming after you. Okay, if you are doing syndicated or abusive, these are big, bad, nasty things. The IRS has been talking about these forever, right? That we're not happy with these types of arrangements. We don't like them. We're going to come after people that use them. But yet there's still sales organizations out there pushing, oh yeah, give us $75,000 and we can save you $300,000 on your tax returns. Okay, guys, really? Anyway, let's talk about these two different ones. So now I do want to say this right off the bat. There are good ones. There are good conservation easements. There are good insurance arrangements and insurance companies. There are good ones and there are bad ones. Okay, so let's talk about the difference. Conservation easements, okay? Syndicated conservation easements. When you hear that word syndicated, often what's happening is you've got one organization that's purchased massive amounts. I mean, we're talking hundreds of thousands of acres of property that would be otherwise considered conservation easements. And what these organizations are doing is they're syndicating, they're bringing in a bunch of investors and offering these investors, my perfect example, you pay us $75,000, we're going to give you a tax deduction for $300,000, $400,000, $500,000 in these syndicated conservation easements. Now, the word that bothers me about this particular one is syndicated, okay? So a conservation easement, the general overarching theory of a conservation easement is I own a house, I own a piece of land, I own property, okay? And a portion of that property, I want to create a conservation easement. A section of my property is going to go for conservation. Now, that could be conservation of a desert wildlife, it could be conservation of a river, it could be conservation. I mean, generally it's some sort of nature type conservation, right? If you think about the conservation lands that are in the US, right? Typically these are public parks, right? You can't live there, you can't build there, you can't do anything with it. Well, a conservation easement, the basic theory of a conservation easement is I have land, I want to make it a conservation, and therefore I'm donating to charity, right? I'm creating something for the public good, and then I'm going to get a tax deduction for it, okay? But in most instances, what's happened is you've purchased, let's say you bought a house, and that house backs up to a nature preserve, okay? And your house is on 1 acre, well, maybe a quarter acre or half of an acre of the land that you purchased backs up and could be converted to public use. It's a conservation easement, right? It's a piece of your property that will now become a conservation. That is a very standard thing, and it happens a million times, right? This is not a problem, but you purchased the property. You are now giving up your rights to a section of your property. You're making it a conservation, okay? Basically, you paid $1 million for that lot in the house, and you're getting a donation value, this conservation easement of $300,000, $500,000. You know, you must obtain a fair market value evaluation. There's got to be an actual appraiser that comes out. They do appraisals, you know, all this kind of stuff. The problem that the IRS has with, so that's all good. It's valid. It's legal. It's totally good. The problem that the IRS has with these syndicated conservation easements is you never bought it, right? Well, let's take the example. And this is a real example, which is why I keep using this. You bought into this partnership for $75,000, and now you're going to get a tax deduction worth more than what you paid. That seems to be one of the keys here, right? It's you paid much more than what you put in, okay? Because you could have bought a piece of land and you sat on it for 20 years and the value went up. So it's not only that the value went up, but generally it's also about the speed, right? So you put into this syndicated conservation easement, I'm putting in $75,000 and a month later, I'm getting a tax deduction for $300,000. How did that happen? How did you buy something and a month later, now it's not cryptocurrency, right? A month later, that kind of volatility in land, that's a part of the issue that they're going after here. Okay, so really you have people, they're doing bad things. Okay, so generally, if I hear, as the tax goddess, if I hear the term syndicated conservation easement, makes my skin crawl, right? Because the IRS is specifically looking at this. And you guys know that we only ever bring tax strategies that are legal, totally above board, approved by the IRS, these kinds of things. Okay, so if you hear syndicated, excuse me, get all worked up about this. If you hear syndicated conservation easements, I want you to be very, very, very careful with that. Okay. Now, moving on to these abusive, this is the term, abusive micro-captive insurance arrangements. Okay, so abusive is the key term that I'm going to be using in this conversation. You are allowed to have an insurance company. So let's start there. It's written into the law. It's code section 831B. If you want to go look it up, 831B as in boy, you are allowed to set up your own insurance company. But if you set up an insurance company, you have to use it like an insurance company. Okay, so let me give you the good side and let me tell you what the bad people out there are doing. Okay, so in either case, you're allowed to set up an insurance company. Okay, now you may be the only person insured by that insurance company. Okay, it's not great, and there's some tweaks here. It'd be better if there was a risk pool with multiple people. Okay, but it's okay. You can set up an insurance company. Now, where you get into abusive versus not abusive. Okay. In a good version of an insurance company, if something happens, you go to your insurance company and say, I've been paying you premiums and this bad thing happened, please pay me, right? And the insurance company pays you out on something that's actually happened, real life, there was a problem and something actually happened and you got your money out. That's totally good, totally acceptable. Where people are running into issues here, okay, is on the other side, these abusive captive insurance strategies. One, they're insuring risks that are not real. Okay, so let me give a perfect example. I live in Scottsdale, Arizona. I have never, in the 30 years that I've lived here, seen a tornado, ever. Dust storms, yes. Tornado, no. So if I were to go buy insurance against tornado and buy a policy for $100,000, is that reasonable? Why would I ever think that a tornado would come here, right? Okay. So people are buying insurance on things that are not reasonable. They're not real risks that could actually happen. Okay. So that's the first problem. Second problem is if the risk, so let's say you buy a normal policy, right? So Arizona does have flooding. Okay. And I know that sounds weird to anybody who doesn't live in Arizona, but if you live in certain areas, there are flooding risks for living in those areas. Okay. So if I buy flood insurance, that is a real risk, right? That is a real risk. But if I actually get hit with a flood and I do not go to my insurance company and say, okay, pay me, I got hit with this, that could also mean that you're effectively abusing it. You bought that insurance policy with no reasonable thought that you would actually use that insurance policy. That's another area that they're going after these abusive captive insurance companies. Okay. So on the good side, let me give you some examples on the good side. Okay. We actually work with captive insurance all the time, right? But we work with the good kind, right? The totally above board, level 8, but crossing the T's, dotting the I kind. And the perfect example of the good kind is what happened during COVID. Okay. So we had a lot of companies that bought insurance policies for a bunch of different things, different types of coverages, right? So you can cover it for health insurance. You can cover it for damages. You can cover it for acts of God. Keep that in mind. You can cover it for acts of God. You can cover it for key man insurance. Okay. You can cover it for cyber threats. Okay. I mean, there's all sorts of different types of policies that you can cover it for. Enterprise risk management is probably one of the most common ones. Now, this is a real case. I'm giving you a real case of something that happened when COVID hit. Okay. Had a client, had his own insurance company. Right now, you still generally, when you have your own insurance, you're still generally keeping other insurance, right? So if you have State Farm or Farmers or whoever, right, that is running your normal insurance, typically these types of insurance companies, these captive insurance companies, typically are setting up policies that your main company will not cover. Remember act of God? Remember I said act of God, okay? So have a business owner, caterer, okay, provides food, right? COVID hit. He had $600,000 worth of food spoilage because all of the food that he had purchased to go do his job with could no longer be, he couldn't do his job. He couldn't deliver his service. $600,000 worth of food lost. First place he went was his traditional insurance company, right? Because you go to your traditional insurance company first. They're supposed to cover baseline things, okay? In his business, food spoilage is a baseline thing for his industry. He's a caterer, okay? He goes to his insurance company. Insurance company says, nope, COVID was an act of God. We are not covering it. He was floored. His jaw hit the floor. So I have been paying you, insurance company, for 20 years for this business, right? And now you've taken all my premiums and you're not going to reimburse me for one of the key components of my business. $600,000 worth of food loss, okay? So what did he do? He turned around and went to his insurance company, who did cover act of God, and said, okay, act of God, I lost $600,000. His insurance company wrote him a check right then and there, $600,000. Here's your money, done, covered, okay? So not only is his insurance company a valid, real thing, he's got real risks that very clearly COVID showed so many companies that, having your own insurance company is actually a real valid thing because your main insurance company will not cover it. Okay. So he had a real live case, a real thing. He got his money back. It was a real risk to him. He also, in COVID, wasn't out $600,000. Right? I mean, could you imagine in your business just being out? You're just out of the money. Okay. So guys, without going, I'm going to go off on a rant if I keep looking at that. Without going way into detail, the reason why I kind of started laughing at the beginning of today's video, and I know today's video is longer, so I apologize for the length here, guys. In my world, right, and I think you guys know, we ask, what is your aggression scale? Okay. 0 to 10. 0 meaning the IRS never calls you never ever, except for random audit, because that can happen, to 10 meaning we're all going to jail. Okay. Now, I am a CPA. You can see here, right here in my title, I am a CPA, a certified public accountant. Okay. I'm not going to jail. It's not happening. Okay. So I always tell people that, listen, Tax Goddess will sit at a level 8, but we are not going to push a client to go to a level 8. If you're at a 2, if you're at a 0, if you're at a 4, we will use tax strategies that work within your aggression scale, within what you want to do for your life and your comfort. Okay. So I laugh when clients kind of freak out, like, oh my God, the IRS is going to hire all these auditors and these experienced attorneys, and they're going to come after us because, we have one of these insurance companies. Guys, let's back up. The first thing is, Tax Goddess would never, ever recommend, and I'm hoping any other CPA out there has never actually recommend an abusive micro-captive insurance company, right? Or a syndicated conservation easement. I mean, the IRS has been nothing but clear. They are looking at these. They don't like these. They're going to come after them. So when we get that little panic from our clients, first things first, don't panic, okay? You've got a Goddess and our entire team here at Tax Goddess. You've got our entire team on your side, okay? You might get a call. If you're level 8, you might get a telephone call. But have you followed the rules and crossed all the T's and dotted all the I's? If you're working with Tax Goddess, you have. So if you're worried that you did get into a syndicated conservation easement, or maybe you're a little worried about this insurance program that you set up, reach out to us. Reach out to taxgoddess.com, okay? We have ways to get you out of these things. If you did do something wrong, not to your intention, I'm sure you did not do anything intentionally wrong, but we have ways to get you out of this. We have ways to help you mitigate penalties. If you're in a bad insurance, if you're in one of these abusive micro-captives, we have ways to roll you into the good ones. Okay. So, reach out to us. Reach out to the team at Tax Goddess. We would absolutely love to help you. And in the meantime, don't panic. Working with Tax Goddess, we got you covered. All right. So if you guys have any questions whatsoever, please don't hesitate to reach out to us, and we'll try to help the best we can. All right. Thanks so much, and have a great day, guys. Bye.